Assalamualaikum and good day. I wish to our beloved lecturer, Mr. Faizal Basri, and our fellow colleagues from NBO2B Semester 2 Financial Management class. So, me, myself, Afiq Najmi bin Rosman, Azman bin Khalid, Miss Nur Arbaniah binti Mahad, and Miss Halimatun Saadiah binti Anwar from Group 1 will present our case study for 4 different property company that we research. So, I will proceed with the content. So this is the table of content. For executive summary, I will introduce first. Okay, this report provides an analysis and evaluation of the current financial stability of the selected company, namely Amanah Raya Berhad, UOB Berhad, SP Steel Berhad, and Glomac Berhad. The company will be measured based in the following category: liquidity, leverage, activity, profitability, and market value. The analysis will be based on hybrid analysis method. Firstly, the companies will be measured against its own performance throughout 3 subsequent years. After that, the company will be measured against each other company in the same industry. Each category has its own ratio in which it will be used as parts of the measurement. Liquidity, use current ratio and quick ratio. Leverage, use debt ratio and time interest ratio. Activity, average collection period and fixed asset turnover ratio. Profitability, net profit margin and return on asset ratio. And the last one is market value, which is dividend payout ratio and PE ratio. As for current ratio, fall under liquidity, is the simplest liquidity ratio to calculate and interpret. It also been used to determine company's ability to pay back its short-term liabilities with its short-term asset. The formula is current asset over current liabilities. As for current ratio, stricter test of liquidity compared to the current ratio. Similar use of current ratio but considers more liquid asset used to serve the short-term liabilities. The formula is cash minus inventory minus prepaid expenses over current liabilities. As for leverage, we have debt ratio, measures the proportion of the firm's total debt to its total assets. It also indicates the percentages of the firm's debt financed by the firm creditor. The formula, total debt over total assets. We also have the time interest earned, measures the ability of the company to serve its interest charges applied on the debts. It also represents the margin by which the company EBIT can decline before it has trouble in serving its interest obligations. So the formula is earning before interest and tax over interest. And then we have activity, average collection period, which measure the period of the company to collect the payment on its receivable. It also being used to appraise the company account receivable that relates to the company credit policy. I give you an example: credit standard, terms, and collection policy. As for formula, account receivable over daily receivable. As for fixed assets turnover, it measures the company efficiency in using its fixed asset to generate goods for sales. Higher the ratio is better, as it indicates the company efficiency in generating sales. So the formula, sales over fixed asset. And then for profitability, we start with net profit margin. The net profit margin, or simply net margin, measure how much net income or profit is generated as a percentage of revenue. It is the ratio of net profits to revenue for a company or business segment. Net profit margin is typically expressed as a percentage but can also be represented in decimal form. The net profit margin illustrates how much of each dollar in revenue collected by a company translate into profit. Formula: earning after tax over sales. Return on assets (ROA). Return on assets is an indicator of how profitable a company is relative to its total assets. ROA gives a manager, investor, or analyst an idea as how efficient a company's management is using its assets to generate earnings. ROA is displayed as percentage. The higher the ROA is better. Formula: earning after tax over total assets. And then the last one for executive summary is market value. So we have dividend payout ratio, which is the ratio that indicates the amount of current earning available to common stock holder dividend. And then the formula is dividend per share over earning per share. And then the last one is PE ratio, which shows the relationship between market price of the company's share.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azman bin Khalid. Our group have choose 4 company which is under properties. And the first company is Amanah Raya REIT. Amanah Raya Real Estate Investment Trusted, also known as Amanah Raya REIT, was established on 10 October 2006 pursuant to the trust deed dated 10 October 2006 between the manager, Amanah Raya Candidates REIT Manager Sendirian Berhad, formerly known as Amanah Raya REIT Managers Sendirian Berhad, and the trustee is CIMB Islamic Trustee Berhad. On 13 May 2016, the manager CIMB Islamic Trustee Berhad and Pacific Trustee Berhad entered into a supplementary deed to effect the change of the trustee of Amanah REIT from CIMB Islamic Trustee Berhad to Pacific Trustee Berhad, and the change was effected on 20 May 2019. Amanah Raya REIT is classified as a real estate investment fund and was listed on the main board of Bursa Malaysia Securities Berhad on 26 February 2007. As at 30 December 2019, the portfolio of Amanah REIT includes 13 properties with a total asset value of RM 1.472 billion. The second company is UOA Development Berhad. UOA stands for United Overseas Australia. UOA Group was founded and listed on Australia Stock Exchange ASX as United Overseas Australia in 1987. It is one of the leading property groups in Malaysia. UAA has focused on property development, constructions, property investment, and property management. The group has based its headquarters and business operations in Kuala Lumpur since 1989. UOA also has become one of Kuala Lumpur's more respected and reputable property investment and development due to its success to develop many prime commercial and residential property in prevailing economic conditions. Besides that, UOA successfully listed its construction and development division, US Development Berhad, on the main market of Bursa Malaysia on 8 June 2011, which placed UOA Development Berhad as one of the largest listed property development companies by market capitalization in Malaysia. The UOA construction team is qualified and registered with the Construction and Industry Board, which is known as CIDB, with high grades for building and civil engineering works. Many of their projects have been satisfactorily completed ahead of schedule without compromising quality. UOA will scale greater heights as they continue to deliver distinctive and prestigious commercial and residential projects with the best quality. For the page 12 is company SP Setia also is a property developer that believe in building sustainable living and communities. Their developments revolve around the theme in touch with nature, where construction and maintenance methods adapt have minimal impact on nature. SP Setia's passion for preserving the environment has led to the development of multiple award-winning eco-themed townships such as Setia Eco Park, Setia Eco Glades, Setia Eco Temple, and Setia Fontaines. SP Setia also has become a trusted brand over the years in the realm of property development. In the last few years, the group has enjoyed many success, always staying one step ahead of the competition. Within Malaysia, they have established a strong presence in the Klang Valley, Johor and Penang, while making inroads into Kota Kinabalu, Sabah. The next properties company is Glomac Berhad. Glomac was founded on the vision, passion and determination of two entrepreneurs who aspire to develop inspiring place to live and work in. The founder of the group, Tan Sri Dato' F.D. Mansor, Group Executive Chairman, and Dato' Richard Fong, Executive Vice Chairman, joined force to establish the group in 1988 and have since delivered value beyond expectation in every Glomac project. Currently held by Dato' Sri F.D. Iskandar, Group Managing Director, Chief Executive Officer. Today, Glomac Berhad comprises more than 55 subsidiaries with involvement in every facet on the real estate business, encompassing property development, property investment, construction, property management, and car park management. Glomac Berhad was listed on the main board of Bursa Malaysia Security Berhad on 13 June 2000 and has established a trusted reputation as a responsible and visionary property developer with its solid record of developing townships, residential, commercial, and mixed development properties. On slide number 14, we include 3 years ratio summary by company, and the first company is Amanah REIT Sdn Berhad, and the second is UOA Development Berhad. As you can see in the table, we put together 2018 for Amanah REIT Sdn Berhad, 2018 to 2020, which is have liquidity, the current ratio, quick ratio and leverage, debt ratio, time interest earned and activity, average collection period, total turnover, profitability, net profit margin, return on asset ROA, and market dividend payout ratio and price earning ratio. Same as UOE Development Berhad, we put liquidity, which is have current ratio and ratio, debt ratio, time interest earned, average collection period, total asset turnover, net profit margin, return on asset, dividend payout ratio, and price earning ratio.
Moving on for 3 years ratio summary, but before that, let me introduce myself. Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Albania binti Mahan and my student ID is 2015123043. As mentioned in earlier slide, the analysis will be based hybrid analysis. First step of the analysis will be measured based on the company's 3 subsequent years, followed by companies against the companies in the same industries. In these slides, Slide 15 shows the 3 years ratio summary for Glomac Berhad and SP Setia. Next slide shows the analysis based on the company versus companies in the same industries throughout year on year. The slide shows the analysis for year 2020, 2019 and followed by 2018. The 3 years ratio summary, company versus company, consists of liquidity, leverage, activity, profitability, and market. Further explanation for ratios for each category will be explained next slide. Ratio analysis. liquidity. Based on 3 years analysis, UOA Berhad has the highest current ratio compared to 3 others, and the ratio is far higher than average. If a company have a high current ratio, it indicates that the management might not use their assets efficiently. The lower ratio belongs to Amanah Raya, which is 0.37 in 2019. That's mean for every RM1 for of current liability, Amanah Raya only have RM 0.37 of a current assets. UOA Berhad shows it has the highest quick ratio, which means the company has 4.29 of liquid assets available to cover each one of its current liabilities, and the asset can instantly get rid of its current liabilities. Overall, most of the companies should struggle in maintaining the performance. Most of them have insufficient liquid assets to cover their current liabilities in short terms, which surpassingly the ratio must be more than 1. Next, ratio analysis is leverage. Debt ratio. All companies obtain the total debt ratio less than 1, which is good, but the highest total debt ratio belongs to Amanah Raya Sdn Berhad, which is 0.47, which indicates that Amanah Raya have the highest level of risk. Meanwhile, the lowest total debt belongs to UOA Berhad, which is 0.9. It indicates UOA Development is the lowest risk level among the 4 others companies. The rest companies is intermediate level of risk. Lastly, time interest earned. Time interest earned to measure the ability of the firm to pay interest charges applied on the debt used. As the graph shows, SP Setia has lowest time interest earned due to the lowest interest payment. And it also shows UOA Development Berhad has the highest reading graph on time interest earned. Next will be explained by my friend Halimatun Saadia. Thank you.
Hai, Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. My name is Halimatun Saadia binti Anwar, and today I will present to you about the analysis for activity ratio, profitability ratio, and market value for our chosen property company. First is average collection period under activity ratio. As per result, in 2018, SP Setia has the lowest days of ACP, and followed by UOA Development Berhad in 2019, and in 2020 Amanah Raya has the lowest average collection period. However, Glomac Berhad has the highest among the other company, and it become better if we compare among 3 years of ACP of Glomac Berhad. This indicates that Glomac Berhad have better management for their debtors compared to others companies. Second is total asset turnover under activity ratio. The graph total asset turnover shows Amanah Raya REID Sdn Berhad ahead of all existing companies with an average of 0.44 times for 3 years as stated in the diagram. UOA Development Berhad is in second place with an average of 0.17 times, followed by SP Setia with 0.12 times, and last is Glomac Berhad with 0.11 total asset turnover times. A high total turnover ratio often indicates that a firm effectively and efficiently uses its assets to generate revenues. A low total asset turnover ratio generally indicates the opposite. A firm does not use its asset effectively or to its full potential to generate revenue. Next is analysis for profitability ratio. First is net profit margin. As you can see in the graph, UOA Development Berhad shows that they have higher ability to obtain profits for distribution to the equity holders and internal source of financing to support normal growth, and it keeps increasing each year. The other three companies having ups and downs for their net profit margin. While for return on asset, ROA, the trend for ROA for every company is up and downs. For the year 2018, UOA Development Berhad show higher ratio of ROA, while in 2019 Amanah Raya REIT Sdn Berhad led on ROA, and finally on 2020 Glomac Berhad has the highest ratio for ROA. This shows every year company management was trying their best to manage their available assets to make sure it can turn into profits. The last ratio analysis is for market value. Under market value, there is two ratios. First is dividend payout ratio. For dividend payout ratio, we found that every year each company managed to pay dividend to their stockholders. In 2020, SP Setia is very well earned, proven by the dividend payout ratio for their stockholder is the highest among company, which at RM 1 ringgit and 50 cent. Glomac Berhad is consistently has lowest dividend payout ratio throughout the years. Second is price earning ratio. For the year 2018 and 2019, Amanah Raya REIT Sdn Berhad shows the highest PE ratio, followed by UOA Development Berhad and Glomac Berhad. In 2020, UOA Development has the highest ratio with 81.10. Meanwhile, SP stay below negative rates for all 3 years in a row. These are the list of references that we use in order to complete our case study. Thank you so much.